Today in crypto, I outlined the reasons why it is clear to me that Bitcoin will go to $100,000 and beyond in the coming cycle. And no, this is not about banking the unbanked or retail FOMO or really anything like that. This is about cold, hard money, especially the money from big investors. Institutional money, I believe, will push Bitcoin to $100,000 and more in the coming years. I'm going to explain why. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. By the way, the next issue of Wealth Mastery will be hitting the inboxes of paying members on Wednesday at 8 p.m. Eastern Time. In this issue, I cover some of the biggest upcoming price catalysts for specific altcoins. I sat down with the founder of Elrond to discuss the upcoming Elrond mainnet, as well as some of the DeFi infrastructure that is being built out for Elrond right now. Rect Capital shares some hot technical analysis on Bitcoin and trending altcoins. DeFi Dad discusses the topic, is DeFi actually right for you or not? Forrest drops a hot report on Polkadot, which is a coming Ethereum competitor. And Jesse reviews the much hyped DeFi money market. Basically, crazy amounts of value, and all of that for just $39 a month. So let me and my team save you your time and help keep you ahead of the curve in these crazy, crazy crypto markets. You can get signed up using the link down below in the description. Okay, so on to the topic of today. Well, Bitcoin was originally born as the people's money. Increasingly, the kind of people getting into Bitcoin tend to be the people who have a lot of money, particularly the ultra wealthy and the institutions. You know, we're talking about fund managers, hedge funds, Wall Street traders, venture capital, family offices. They're all people too, right? Sure, anyone can still go out and actually buy themselves some Bitcoin. You and I, we can go today and just grab some Bitcoin, stack some sats, do some chilling. But when we look at how much investment is actually going into Bitcoin and how much of that money is coming from big institutional players, we start to get a picture of why Bitcoin is inevitably going to hit $100,000, and that price pressure is not going to be me or you or your uncle or your Uber driver or whatever. It's going to be the big money crowd that fundamentally represent the next major class of Bitcoin buyers. They'll buy it from people like you and me in the future, if you're willing to sell your Bitcoin, that is. By the way, I believe that this high valuation of $100,000 plus, it's likely going to happen during the coming cycle. My money is still on a new high for Bitcoin in late 2021 or early 2022. And the reason why Bitcoin is becoming so increasingly popular with big money players is that in their eyes, Bitcoin has made it. Bitcoin is no longer some dark web weird thing. It's a serious asset that serious investors need to have exposure to. I mean, if Paul Tudor Jones is playing with Bitcoin futures, I guess I can too. So let's discuss the evidence for why institutional money will push Bitcoin to $100,000 and beyond. And look, all these stories, they're just from this year. In fact, most of them from just the last couple of months. So it's just the tip of the iceberg in terms of what's going on. So the first story is that Bitcoin funds are on the rise and existing Bitcoin funds are doubling down. Recently, the New York Digital Investment Group, NYDIG, raised $190 million from just 24 investors, meaning that each of these investors put in close to $8 million to understand what kind of people are investing in that fund. Now, they did that for their newest Bitcoin offering. Now, this nearly doubled the firm's investment in Bitcoin to $330 million in total. That's just one frickin' fund. Also, in April, the Toronto Stock Exchange approved the Bitcoin Fund to hold an IPO, and that is now a publicly traded stock on Canada's premier stock exchange. And these are just the early adopters when we're talking about the funds that are coming into the space. There will be many, many more. Then, of course, we have the infamous Grayscale Investment Trust, which just keeps doubling down and doubling down and doubling down on Bitcoin. Since the Bitcoin halving, they have purchased the equivalent of 150% of all of the newly mined Bitcoin, which is a mind-boggling amount of Bitcoin for one organization to be gobbling up. The demand is being driven almost exclusively in terms of Grayscale by institutional investors looking to gain exposure to the best performing asset of the last decade. In fact, Grayscale has been a major factor post-halving. They are on track to own up to 3.5% of the total supply of Bitcoin by next year, meaning that by proxy, institutional players will own 3.5% of the supply of Bitcoin via Grayscale within the next year. Considering the wild success also that Grayscale has had, we have had the announcement by Wilshire Phoenix that they will also be entering the Bitcoin Investment Trust game, launching a product almost exactly the same as Grayscale, and really that should come as no surprise, looking at how much money Grayscale is making, how much interest there is in Grayscale's products. But it also means that we now have another player which could within the next couple of years have 1 or 2 or even up to 3% of the Bitcoin supply under their control. And that's just 2 trusts. There will be more. There will be more. Then there are the Bitcoin derivatives providers, which honestly, for the most part, are of little interest to us as long-term holders. And really, they're not going to be the ones that push the price up. They'll just speculate on the price going up, since the majority of their contracts are actually cash settled and do nothing more than manipulate the markets. However, we do have Backed, which does offer physically settled and thus physically backed Bitcoin products. Now, these have seen a massive surge in popularity in recent months. And look, it's still far off in terms of the cash-settled paper varieties and the volume that they're doing, but their physically settled products are growing in popularity. Sadly, though, many institutional investors, they're just getting exposure to Bitcoin via cash-settled futures or cash-settled options contracts, which are just derivative products, so not really super awesome, but thankfully it's not all the players. And of course, the North American markets, while prominent, are not the only game in town. In fact, other countries have been making some very, very big moves in terms of institutional adoption for Bitcoin. Germany's biggest stock exchange added a fully backed Bitcoin ETP. And Switzerland, they have multiple exchange-traded products available on their 6 Swiss exchange, and there's others as well, but those are some of the more recent big examples. In many ways, other countries, they're already starting to beat the USA at the regulation game. While we recently did have approval for an Ethereum token, which is backed by U.S. Treasuries in the United States, the fact that a Bitcoin ETF has not yet happened and that cryptocurrency regulations really have not been made more clear in the USA, which, as we know, of course, is such a critical market both in terms of retail and in institutional adoption, that has actually held money back from flowing into Bitcoin, particularly from the institutional crowd. It's not such a problem for retail, but some of these institutions, they're waiting for regulations to be more clear. And as different legal precedents develop, many investors are starting to feel more and more confident playing around with Bitcoin. But the approval of a Bitcoin ETF in the USA will be a big, big deal for Bitcoin. That one thing alone, that one thing could send Bitcoin up to $100,000 and beyond. And outside of these varieties of different investment products, we also see massive amounts of money continuing to flow into Bitcoin mining. The huge investment by Core Scientific and the $5.3 billion hedge fund Horizon Kinetics, which bought 17,000 Bitcoin miners, that was a big power play. That single move captures them around 1.5% of the total hash rate of the network. Massive, massive investment. Also, just today, Fidelity International announced that it has doubled its stake in Bitcoin mining firm Hut 8. Now, Fidelity has been a long-time Bitcoin supporter. They've been mining themselves. They've been investing in mining companies. They've been selling Bitcoin to their 34 million customers. So, yeah, Fidelity has been on board for a while. Look, just you can see where the trend is going. You see where the money's going, follow the money and you will end up at the answer. And that's a lot of stories and that's a lot of evidence that I've just covered here for you, but also understand this is just the tip of the iceberg, man. These are just the early movers. There's a lot more stories that I didn't cover, and there's a lot more stories that are going to be coming. The first movers here, they're going to be ones who really reap the most rewards. Latecomers, they will buy their bags. The more institutional money that comes in, the more of a self-fulfilling prophecy all of this actually starts to become. That FOMO will start to kick in mega hard, but it won't be FOMO of like regular people. It's going to be FOMO for hedge funds, FOMO for trusts, FOMO for private equity firms, FOMO for high net worth individuals, and on and on and on. No one will want to be last, meaning that when things actually get moving in the institutional crowd, that it could start moving very, very quickly, which could see that big push within the next 18 months to get us up to $100,000. And understand too, the institutional money, it's not going to go away. It's only going to increase. And the more that it increases, the more the price will rise in the long term. The Bitcoin halving, you have to keep it in perspective. It only happened, like 2 months ago? We're still so early right now. We're seeing incredible interest from an entire new class of money at the exact time when we are experiencing a massive supply shock for Bitcoin. This is why I predict that institutional players will be key in driving the price of Bitcoin over $100,000. So what do we need to do? We need to stack sats, and then we need to chill. Even if I'm a huge supporter of crypto outside of Bitcoin, there is a reason why Bitcoin maintains the #1 position in my portfolio. Also, as a final note, even though I see institutions pushing Bitcoin to the moon as an inevitability, we do also, of course, then have to deal with all the negative aspects that those institutional players bring with them, like Bitcoin trading flat at the weekends, increased correlation to the stock markets, all the drama and games of manipulation that Wall Street types really bring to any asset that they touch, as well as really just the concern of Bitcoin becoming something for the big money crowd, not for regular people, of institutions cornering massive amounts of the supply. Look, you don't have to like big money getting into Bitcoin. I'm not a massive fan personally, but this is exactly what is happening, and it is a major factor that is going to push Bitcoin to the moon. Anyway, those are just my 2 Satoshis. Your question for today: do you believe that it's going to be institutional money that will push Bitcoin past $100,000 in the coming years, or is it some other factor that's going to push Bitcoin to the moon? Thank you so much for watching today's video. As always, I massively appreciate your time, so thank you for taking a little bit of time out of your day to come over here and listen to this dude talk about cryptocurrencies on the internet. Long live the blockchain, and peace out till next time.